for a couple of years now, and it's something that we do mostly out of passion to bring the community together, like today. Before we kick things off, I want to acknowledge and thank a few people, some entities who's been behind Startup Grind for the last couple of years and over the months as well. So we have some amazing sponsors: Ministry of Communication and Information Technology in Qatar, Qatar Financial Center, Builder AI, Jeeb, which was one of our first sponsors that had trust in us, Hyperthink, and Urban Point. So huge shout out to them, because their support makes a big difference so that we can continue to keep these things going in the future as well. And nothing of this is able without some awesome partners. Workington, first of all, where we are today. They've been our home for Startup Grind for the last, I don't know, I've lost track of time now. For the last couple of years, they've been an awesome facility and an awesome team. Thank you, guys. Business Startup Qatar, Deal Room, VNTR, Innovation Cafe, eHarris, Karak Stop, Mangosteen, who are behind the FinTech Festival in December. Malik is here. I Want to Grow podcast and the Founders Forum. So these are all some of our partners that really been supporting us right throughout. I want to just take 2 minutes more. I normally don't do this, but I want to take this time to share some updates as well. Startup Grind, as a community platform, we are partnering with local events as well to contribute to the local events and the ecosystem. So the event next week, ContiQ event that's happening in Qatar, Startup Grind is a community partner, and through our partnership, some of the startups in Qatar have been able to secure the pods free of charge at this event as well. So those are some of the things that we do through our partnerships. We are also partners with Malik's FinTech Festival in December as a community partner. We are also the community partner for the World AI Summit that's happening in December. And both these events, we've already shared through the groups as well, some of the benefits that that the startups have. And at the FinTech Forum as well, FinTech Festival, there's going to be some new announcements coming up as well. Some of the recent quick updates on some of the achievements we've had. We've had an amazing partnership done with Deal Room, the global platform for investors and startups on data. And through that partnership, more than 40 startups in Qatar, startup founders have been able to get a free subscription to Deal Room, which I think is an amazing platform for knowledge and information that startups can gather. We've also, after a long time, with a lot of effort, we've struck a partnership with WAMDA. Through that partnership, Startup Grind is able to actually today reflect most of, at least I hope, most of the funding rounds that happen in Qatar in the WAMDA monthly MENA updates. Because for many years, our fundings are never reflected in this report. And this is something that many of us who talk about it was troubled. Why? We have some good stuff happening here. Why not share that news? So this is another thing that we've been able to do by Startup Grind through the partnership with WAMDA to get our achievements in Doha and in Qatar out into the MENA ecosystem as well. So that's a little bit about Startup Grind and what we've been doing and what keeps us busy. So again, you guys are not here to listen to me tonight. So I'm going to hand over the mic to Salman, our amazing, good-looking moderator for tonight, right? So most of you know Salman. He's from the FinTech Hub at Qatar Development Bank. Comes with a ton of experience working in the startup space in multiple accelerators. So Salman, over to you.
All right. Assalamu alaikum and good evening, everyone. As Indika said, lots of known faces in the audience and, of course, some new faces as well, which is great to see because, you know, it's a validation that as an ecosystem, we are heading in the right direction. First of all, thank you so much, Indika. Thank you, Startup Grind. Thank you to all the partners, who help in putting together this event. And not just this, but the series of events, that you put together in hosting, in bringing together the community and having this open dialogue. It's so important for the ecosystem. For the sake of introduction, for those of y'all who don't know me, Indika was very kind to introduce me. I'm Salman Surti. I work for Qatar Development Bank. As part of the same, I have the honor of leading the Qatar FinTech Hub program and the Qatar SportsTech program. I have been fortunate to be a part of this ecosystem for over 5 years now. Been honored to work with tons of startups all the way from early stage to scale-ups. I can see some of them in the audience. It's great to see their success. Well, tonight is not about me. It's about this gentleman who is sitting over here, and it's about you all. So I'm not here as a representative of QDB or even as Salman. I'm here as one of you. I'm officially taking my QDB hat off and wearing the audience hat on, right? So I'm going to be asking the questions on your behalf to get the best information out of these gentlemen in the benefit of all of us. All right, before we get started, please allow me to introduce the panelists, starting off with Alexander Wiedmer, who's a partner at Rasmal Ventures. Alex, I won't be able to do justice to your introduction, so you might have to do it yourself.
Thank you, Mr. Good-looking, apparently moderator. Well, my name is Alex. I'm one of the managing partners of Rasmal Ventures, which is a new venture capital fund established in 2023 in Qatar, with our fund recently launched. I've been in VC for 24 years, actually. I joined a brand name European VC in the year 2000 as analyst. I became a partner in 2004. We did, at that time, deals predominantly in Europe on a pan-European basis, and also in North America, in the US and Canada. I became interested in the region, and in fact, I became involved with the region here in 2013, when I was one of the managers of a fund called STC Ventures, which was the first corporate venture fund of Saudi Telecom, and it was quite a successful fund, with well, it being the first VC fund in Karim among some other good deals. So I came to Qatar now almost 5 years ago, I think shortly after you, Salman. Worked at first advising QDB on their VC strategy, and then started working on creating a fund, because the regional neighbors all had funds. Qatar did not have a fund. There was somehow some kind of a market gap, which we're all filling. I just started working on it longer ago, so I took longer to get there. And so that's who I am in a nutshell. I guess I've done about 60 VC deals in my career, maybe on 3 continents, with a decent performance. That's basically who I am.
Well, wonderful to know more about you. So many people don't know this, but I had the pleasure of working with Alex in the Qatar SportsTech portfolio. Alex, maybe I never told you this, but I actually learned a lot from you. So I'm not an investment guy, but was really very impressed by the ocean of knowledge that you bring. So thank you. Next up, we have, can we have a round of applause for Alex, please? Thank you everyone. Next up we have Michael. Michael is a partner at Golden Gate Ventures. Michael, I would very much appreciate if you can introduce yourself as well.
Yeah, sure. And following Alex, I didn't know that good looks was a criteria for today's.
Well, that's the reason you're here.
You guys didn't tell me this. Hi everyone, my name is Michael. I have also been in this space for quite a while. I remember when I built my first startup back in the Netherlands. For any of the Dutchies in the house, hi Holland. Hey guys. So I built a startup in the early 2000s. We were one of the earlier data centers in the Netherlands. My company got acquired in 2007. Knowing what I know now, I should have never sold our company. But yeah, it is what it is. I then spent a few years working for the Dutch government. I was a vice chairman of the Economic Development Board, advising the Dutch Prime Minister and a few of the municipalities. Before spending full time on investing, initially invested my own capital, but in 2013, packed our bags and moved to Singapore. So in Singapore, I'm a partner of Coordinated Ventures. We're an early stage VC fund. We have 4 funds under management in the Singapore market, invested over just shy of 100 deals, done about 10 exits, 2 IPOs, 1 in Indonesia, 1 on the New York Stock Exchange. But yeah, as it happens, 7 months ago, I moved to Doha, and now sitting here with all of you guys. We launched our fund a few months ago. It took a bit of time, and maybe to Alex's point, I think Alex doesn't know this, but Alex was an example in terms of sort of leading the charge here. But at some point we said we do want to expand our footprint, and we felt that Qatar, and specifically Doha, was a good ground to set up our fund. I'm very fortunate, and he didn't expect this, but I'm going to give my partner Hussein a big shout out, because I'm very fortunate to work together with Hussein on this fund, and very excited to be investing with and alongside you guys.
Well, thank you so much. So I think I first met Michael maybe last year when you had invited some fintechs at the Net Doha. Was it last year or was it this year?
That was last year, yeah.
Okay, I thought I'm just getting too old to remember a date. But, well, nice to have you here. Once again, Michael, thank you so much. And last but definitely not the least, Mohannad. Mohannad, firstly, welcome to Doha. I hope you're liking it over here. I hope you're getting well acquainted with the startups community. And, and we are getting to know you better. So we'd love to hear a bit about you, about your background, what brings you over here. Very keen to know that.
Thank you very much. It's a great pleasure to be here in Doha. This is a great community. It's a privilege to be here. So my name is Mohannad Taslaq. People call me Big Mo, so I think you can see that, obvious. So I'm a serial entrepreneur. I lived the past 20 years in Silicon Valley in San Francisco. I started a company in gaming and 3D printing, which I sold in 2020. Then I became an angel investor. I invested in AI, health tech companies. Then I moved back to Amman, Jordan. I became a professor at the university. I started a venture lab at the Princess Sumaya University, where we invest in students to create their startups. We give them grants. And I became an advisor to the Royal Hashemite Court. Of course, I'm an Alchemist alumni. I'm class 4, so I'm an oldie, 2013. When Dr. Maher and Ravi called me and said, okay, we're opening something in Doha, without hesitation, I said, I'm in. So I'm privileged to be here. I'm still learning more about Qatar. I'm privileged to have a great team like Majid working with me, so I'm getting acquainted and learning. And I believe Qatar has a great future, great technology entrepreneurs, and an ecosystem that is being built. Thank you.
Thank you so much. Well, welcome once again to all the panelists. Well, let's dive right into it. So my first question is to everyone, but mainly to the VCs sitting on the panel, right? So, back in the Web Summit, when Sheikh Mohammed bin Abdurrahman, His Excellency, he got on stage and he announced the Funds of Fund, right? Do you think that was the turning point for Qatar? Do you think that is what influenced VCs like yourself to actually move over here? And do you think that without that, we would be able to see the shift, or hopefully the shift that we are seeing as of now? I would start off with Alex, actually, based on seniority based. Not old, seniority, Alex.
Test. I think probably in seniority that way as well, but in any case, so do I see that as a catalyst? That's your question. Yes. Well, I mean, yeah, more funds on the ground to attract VCs, of course, is a catalyst for VC activity. I mean, fund managers are dependent on finding LPs. And, in many jurisdictions, government plays a very active role in this. And so Qatar, in some ways, is a follower, is following other successful jurisdictions that have done much the same thing. And so yes, I think it will have a very beneficial effect in bringing funds to on the ground in Qatar. Where there are funds, there are more entrepreneurs. The funds, even if they don't invest directly, they interact with the entrepreneur ecosystem. They advise, they mentor, they attract more entrepreneurs to set up around where they are. So yes, I think it's highly beneficial. Is it the only thing? Is it the one thing that is going to make the Qatari innovation ecosystem? No, I don't think so. I mean, you and I have been here active in this business for 4 years at least in Qatar. We've seen in the last 4 years before the announcement a sharp rise in entrepreneurial activity. There have been other initiatives that have contributed to that. There's an increase in the sophistication of the projects that we see, and this all happened over progressively the last 4 years and not necessarily since last February. So I think it's a big part. I don't think it's the one moment.
Definitely, I agree with you, but don't you think there was a missing puzzle to the entire thing, which kind of got together because of this this initiative by QIA or
as I started my little speech, funds on the ground are always good. The government plays a role in attracting VCs. Absolutely. So yes, it's a very important part of what's happening in Qatar.
Wonderful. Michael, do you have any thoughts on that?
Yeah, maybe I'll add a slightly different perspective, kind of coming from Singapore. So I'll give a bit of a history on what happened in Singapore back in 2011. So in Singapore, you had a program called TIS, and TIS effectively was an old school matching program. So you invest $1 in Singapore, the government would match you for $1 as well. And the Singapore government actually effectively went out to search fund managers globally. They were in the US, they were in Europe, they were in parts of Asia. And that's kind of how a few funds were launched. Some of them were government backed, some of them were private capital. What helped in that time, this matching program, was at least if I put skin in the game into the Singapore ecosystem, I get something back from Singapore. So it's kind of an equal sort of matching program. The program itself didn't entirely work, so they went through a number of iterations and they built other different programs. But they went from 10 VCs back in 2011 to I think the latest count is 397. So there's massive growth in the past 11 years. But there's a very, very important part to this. I think the most important thing is doing stuff for the right reason. Venture is hard enough as it is, and where there is a very, very difficult balance between purely capital, am I doing this for capital? Am I doing this support the ecosystem? Or am I doing this to add value on different parts, the ecosystem, my investors, and the portfolio companies? I think what happens is when there are big announcements, it is definitely a catalyst. So it's good for Qatar, it's good for the ecosystem. It's brought a lot of attention from global funds, and they will all of a sudden looking at Qatar and say, hey, there's something happening here. I think everywhere that we travel, we'll hear about, hey guys, what's happening with the fund of funds? So people are curious and they want to know. But what is important is you need a mixture of funds that are on the ground, that are here before the announcement, that are putting their blood, sweat, and tears into this ecosystem before anything happened. You need funds that are coming international, that are catalyzed by what was announced by QIA. And long after this program, you still need funds coming to the ground. So I do feel it's a catalyst, but it is it is a part kind of in the longer journey.
Sure, makes sense. My question next is for Mohanad specifically. Mohanad, as you know, there are multiple incubators over here, right? There is, to name a few, there is Digital Incubation Center, there is Qatar Science and Technology Park, there's Qatar Business Incubation Center. All of them are doing wonderful jobs. I will not name my incubators. But how is Alchemist different from all these existing incubators? What new are you bringing to the ecosystem? What value are you looking to add? How can the startups community see it as a, in their benefit?
So Alchemist Doha is an equity fund, okay? But it's great that it has three pillars. It has the investment, it has the incubation, and it has the acceleration as well. Alchemist Doha was established between the Alchemist Accelerator in San Francisco and the QRDI. So what we're bringing to the table is the expertise and the know-how and the mentorship and the investments that are all happening in San Francisco, trying to give this into the entrepreneurs that we're investing in and bringing to Qatar. What we look for is that we want to build also here in the ecosystem. So we're trying to bring great entrepreneurs to come and make Doha like their home. Okay, to come here, to relocate to Doha, to make this as a launch pad. Part of what we're doing, so Majid, our partner here also, he's doing all the integration into the ecosystem. So as if we have a business development person working with every startup that comes. So our target is a B2B and B2B2C companies. Majid helps guide these companies into potential customers. So we want this to be successful. And being part of the Alchemist, each company that we invest in has the ticket to be part of the Alchemist Accelerator in San Francisco. So you can get everything you want as an acceleration. And also, if you're raising other rounds, you're going to be exposed to our LPs. You're going to be exposed to our investors, big names like Draper or Sequoia and others. So in general, I would say we're trying to be different, okay? We want to bring everything that is good about what's happening in San Francisco and build that here in Doha.
So we'll dive more into your investment strategy, investment thesis. However, one follow-on question is, specifically to your incubation and acceleration part, right? So do you see the existing incubators or the incubator programs on ground, with the likes of the ones that I mentioned earlier, as a competition, or do you see a collaboration opportunity over there? Are you looking to consider the vetted pipeline that is coming through these incubators for your program, or how do you envision the collaboration?
So one of the great things that we agreed on when we started doing the Alchemist Doha is that we're not here to compete with anybody. We want to work and collaborate with everybody. So any incubation center, any incubator, any accelerator that is in Doha is a potential partner with us. So we're not competing with them. We want to work with them. We want to support the ecosystem. The whole vision here is to get and to make Qatar as a hub for tech startups, for entrepreneurs. And that doesn't happen without partnerships. And this is also what we do. We're talking with VCs. Today I was speaking with Asmal. So it's more of you work with everybody to build this ecosystem.
Okay, we'll learn about that in the following question. So what is the difference in each of your investment thesis? Let's talk about Rasmal, let's talk about Golden Gate Ventures, and then talk about Alchemist. And once we talk about your investment thesis, let's learn about how do you plan to collaborate with one another?
Forgive me. Test. So, so in brief, our investment thesis, so we're Qatari-based. We look at investments internationally in terms of the allocation that we see for the funds that we will deploy. We figure that we'll invest something like 15 to 20% of our funds in Qatar. The reason for that is that VC is a proximity business. At the end of the day, you want to be close to the startups in which you invest. So this is the kind of let's say the allocation that we foresee for Qatar. We'll invest about 80% of the fund in the wider MENA region. And we have a smaller allocation of 20-ish% for purely international deals. But international deals, we give ourselves the kind of the discipline to only do deals that somehow have a link back to us. Because it's too easy to go to a foreign geography and do attractive deals that then there's no link back to you, and less, let's say, reason to, really diligence or to see what is the value that you can bring to those deals. So international only when there's a link back to us somehow. And in terms of, let's say, thematic approach, we're a generalist tech fund. So we don't want to put ourselves in a box too early. An investment period is quite long. Tech changes at the speed at which it changes today. You can't put yourself in a box. So we're generalist, opportunist tech. And in terms of stage, we're a Series A investor, but again, there you need to give yourself enough flexibility to do a little bit of pre-Series A when it makes sense, Series B, Series C when it makes sense. That's us.
Great. Just a follow-on question. So when you talk about the link back to us, so does it have any developmental aspect? Like, do they need to have some sort of presence in Qatar? What kind of link back are we talking about over here?
No, link back in terms of we know the founders from before, we know the co-investors, some sort of bridge to us. We have no developmental mandate.
So it's purely commercial.
We purely commercial. We want to make money.
Great. Michael.
So I'll link to the end point. We love making money as well. So then that strategy very much overlaps with between us. I think on the region side, fairly similar. So we're a MENA first fund with the fund here in Qatar. So the majority of our investments are within the MENA region. That being said, we have, of course, a long history in Asia and some history in the US. So similarly, we'll look at deals that are outside of the region with a nexus to here. What is important there is that for all of these companies that we tend to look at, we skew a bit more towards the B2B side. And we like technology and product-driven companies. So coming from Singapore and investing in close to 100 companies there, we see a lot of business model innovation, which is amazing, and it definitely worked in Asia. The next generation of companies are more technology and product heavy and less so pure business model innovation. Specifically because when you look at exits, down the line, 7, 8, 9, 10 years out, what is going to be the biggest differentiator? Business model can be one, but as a fund, we feel that technology and products are now widely available, and you can make some big innovation steps there as well. So we're going to skew heavily towards tech and product-led companies.
And similar to what Rasmal Ventures have, do you have any preference or any certain quota for the local ecosystem? Is there any percentage that you're allocating for the Qatar-based startups?
So the short answer is no. We are very direct in this. We're a MENA-focused fund, so the fact that we don't have to allocate money into a certain geography in our fund makes us very flexible. That being said, the reason that we spend a lot of time working with the local community is we are here to help support, do everything we can to showcase Qatar as a hub and an ecosystem, but we don't have any mandate or don't need to allocate a certain amount of capital to Qatar specifically.
May I add something? So, I think what's really important, I mean, you just heard two fund strategies that are really quite similar. I mean, at the end of the day, we overlap quite a bit. In other markets, it's the same. I mean, many VCs have exactly the same investment strategy. But add to that a layer of corporate culture and, partners' individual track records and appetite for certain different segments. And at the end of the day, VCs that have the same strategy will have completely different portfolios. They may co-invest a little bit, and I know you want to talk about how VCs collaborate, and that's fine, and they do. But at the end of the day, those other softer factors, the corporate culture, the preference for certain sectors, makes it such that VCs with the same strategies invest in different deals at the end of the day.
Very interesting. Mohannad, let's hear from you. What's your investment strategy?
So we have two things before we go into the investment strategy. The first thing is that when we want to invest in a company, the main thing for us is that that founder wants to be in Doha or to relocate in Doha or to have it as a launch pad. So that's number one. The second thing, we rely a lot, because we're part of the Alchemist as well, is that we need the Alchemist team to say yes, that this company actually fits our portfolio, fits our quality, so that we can take it in. Having said that, we're looking in different buckets. Okay, so we're looking for Qatari companies, startups that have a potential global presence. So that's number one. Second, we're looking at the MENA companies as well, but with founders wanting to move into the GCC, into Doha, to make it as a launch pad. We're also focusing on Central Asia, Africa, also in Europe, okay, for companies that want to move into this area. And lastly, we look at expats living in tech hubs like in the US or in Germany who want to come into to this region. So the most important part is that part of our mandate is that we're part of building the ecosystem here. So we want the startups to be here, to come here. That's number one. They have to be quality startups.
And what's the sector you're focusing on? Is there, are you agnostic, or is there a specific sector focused?
We're industry agnostic, so we don't have a preference. But as Alchemist, we do B2B and B2B2C companies. So that's our sweet spot. That's what we're targeting. We have expertise as a team, as the Alchemist, and as partners in different sectors. So that will help us also support any company that comes into our portfolio.
Wonderful. So moving on to my next question, which was part of the previous question, how do you collaborate with one another? Like Rasmal Ventures, Golden Gate Ventures, or Alchemist. How do you plan to how do you see the collaboration happening within the ecosystem?
Yeah, happy to take this. This first.
And I'd go beyond this. Like, how do you plan to collaborate with the wider ecosystem? There are more incubators in the region. There are more accelerators in the region. How do you see the whole wheel working together?
Yeah, I'll kick off on the VC side. In 15 years of investing, and between all the deals, we've only done 2 deals where the first primary round was us only and no other VC. All the other deals were co-invests, whether we lead, co-lead, syndicate. It was always with another VC. So it's a very, very collaborative business. And what I always like is in our founder conversations, we always ask, transparently, like, are you speaking to any other VCs? Are you speaking to any colleagues? And you'll notice the difference between the different level of founders. Like a mature founder will say, yes, we are in these conversations. We're here with this firm, here with this firm. This firm, don't want to share the name, but it's a good conversation. For some of the founders, we sometimes hear, oh, we got a term sheet from this one. And then the first thing I ask is, can I call them? Because we speak together, we speak so often. I speak with Alex, I speak with Samaya, and I'll speak with you guys as well, of course, fairly soon.
Can you speak with us also, Mike?
Of course, and speak with you guys as well. But the same is in Abu Dhabi, and the same is in Saudi and Oman, etc. So, because for most of the deals, you look at the maximum added value on the cap table. So for some deals, it means that maybe it's Alchemist and Golden Gate Ventures, and in other deals it might be Rasmal and Golden Gate Ventures, or Rasmal and Alchemist. It depends on what is the best for the cap table, what is the best for the founder, what is the best for the longevity of this company, what does the next round looks like. So for us it means collaboration between VCs comes natural. And yes, of course, sometimes you will compete to lead the deal, or sometimes you're going to compete for allocation, which is fine, natural part of our business. But in overall, it's a very, very collaborative part. To your question on working together with the ecosystem, we have a fairly long history of working with universities, working with incubators and accelerators. We're going to be doing the same. Accelerators are a very important part of our deal pipeline, looking at deals early, collaborating on, to give an example, in our Asia fund in Vietnam, we had 2 deals. One which is fully incubated, which is a collaboration with a local player. So we work very, very closely with the local ecosystem.
Definitely, but I do think so. Again, please correct me if I'm wrong, right? I do think so. There is going to be a bit of a gap over there, right? And I would love to get your expertise on this, right? Because what I see is that local incubators mostly focus on pre-seed stage, right? Whereas your good selves, you come in at Series A or pre-Series A, right? So I mean, I know there are new players in the market who are sort of filling the gap at a seed stage. However, there is still quite a big chunk that is sort of, you know, where the startups is going through the death valley, right? So how do you see this problem being solved, or what's your take on it?
You're asking me to answer this one? So,
All of you.
yeah, I mean, every stage is a death valley. If there isn't the financing there, at every stage becomes a death valley, right? So in Qatar, you're right. There's a lot of incubation, acceleration activity. And now there are starting to be Series A funds on the ground. And there is a gap between the two. Now, Series A funds can do pre-Series A. Some incubatees or acceleratees are at pre-Series A level. And so that gap is being, let's say, bridged in some way, at least by some of the companies. Now, QDB, your shop, has done quite an outstanding job at empowering the angel community in Qatar, because in other markets, like the UK, for example, there are very active business angels who do bridge that gap, and they're the ones who take that idea out of an accelerator, help the founders get VC ready, and then take the founder's hand, bring him or her to a VC, and get the VC investment. So that angel involvement is somewhere that I think Qatar needs to work on some more. There has to be more of that in order to help bridge that gap. But I wouldn't see it as a death valley. I think we look at early stage deals, if only to know that they're there. We tell them what they need to do in order to, let's say, to qualify for interest from us. We recently launched a program called Open Door VC, where we basically interact with the wider entrepreneurship community for just that, for mentoring, for general help in getting to VC stage. And so I think others will do the same, and we'll get there.
Great. That was going to be my next question about the private sector, but I want to move to Muhannad and ask him a quick question. So we're talking about the pre-seed stage, and how the VCs come in at a Series A or pre-Series A. Where do you come in to fill the gap? Like which phase of startups do you focus on?
So we also come at maybe seed into A rounds. That's where we come in. But if we find, so there's a bucket of founders that we look into. If they are serial entrepreneurs, they have the idea, then that's a credible person that we can work with. So that's something. The other thing, just to answer on the questions to the guys before, is that even when we speak with incubators, it's not just about the current cohort that is happening. So we're going back 3, 4, 5 cohorts back, because these companies could have passed, now they're going into traction, going into a pre-A or A round. So this is where we build all that relation. If we find a great idea with a great team, we're more than happy to look into that. Okay, so as alchemists, but we thrive with companies that have traction, that will require and get the support of the Alchemist network to make it more global and to get better traction and get into other series.
Okay. So outside this, I actually have a question that just popped into my head, and maybe you could, your expertise could help solve it, right? So we see many of the startups looking for investment to develop their product, right? And sometimes the pre-seed investment is not actually enough. It does not suffice for them to actually, to actually go out and develop their products, and they end up diluting themselves. Do you think that having some sort of grant, a sector development grant, a product development grant, is the right approach, of course at an early stage, versus having a pre-seed investment? Where do you differentiate between the two?
So grants are great. Government programs that, the US VC industry, which arguably is not arguably, is the most developed on the planet, it started around a lot of grants. That the government support that was of a different nature than the one we're talking about in Qatar or the one that exists in Europe, the government support was in the form of grants to tech companies to grow faster, or loans at favorable terms. And so those are all great tools. I mean, in the toolkit of governments to empower the innovation ecosystem, certainly grants play a part. There are grants in place in Qatar, and maybe there should be more, but I mean, these tools are being used today.
I would disagree. There are grants, but
there have been grants.
There
Salman.
have been.
You
Yes.
have handed out grants.
There have been, definitely. But yeah, thank you for answering that. My question was more towards, do you see early stage startups, should they consider a grant-based model, or should they go for pre-seed investment? Of course, I mean, grant is free money at the end of the day, but as an investor or someone from that, from that sector, what approach do you see working better?
So I don't think it's either or. We have there's a quantum computing company we've invested in. They started off with grants. This was in Singapore, but it was combined with a few investors, angel investors from the quantum technology field that co-invested, and this was like a lot of validation for us. I don't necessarily think that grants would stand on their own. I think it's really helpful if you have this sort of kind of product mix where you have angel investors and you have a grant specifically in product development and high technology companies. But I think maybe just bringing back Alex's point, like we tend to look at VCs as sort of the solution for everything when it comes to funding. This is so not true. Angels are an extremely crucial point of the entire ecosystem. And again, I don't want to make this evening about Singapore, but one more example about Singapore. So the former Google employees, and some of them are still at Google, and Amazon employees, they came together and they formed an angel syndicate. And what they did was, they ended up being around 80 people. And what they did was they talked to every single VC and said, once we have a deal, we'll send it your way. Whether you like it or not, we'll just send it your way. Eventually, they became an amazing source for deals for a lot of VCs in the Singapore ecosystem, just because they were active angels. So they just saw so many deals. And I believe in any single ecosystem, whether it's Europe, US, here, or Asia, angels play a very, very important part. So if there's anything that you need to do, is can you do more to support angels here on the ground to get them invest more into technology startups at the pre-seed stage?
And if I can just add one thing, so the statistic is 10%. So VCs, at the end of the day, finance about 10% of new tech companies. It's the entrepreneur's job to go and find all possible sources of financing that he or she can find to get his or her company up and running. Of course, the best source of financing is revenues, right? It's sales. So I so agree with Michael. VCs are an answer, absolutely not the panacea.
I think Mohammed wants to add something.
So it's a quick thing. Maybe I'm shooting myself in the leg when I say this, but when I teach at the university, I teach them the solopreneur blueprint. So for any founder, it's not financing. This is not going to make the company. You need to have a business. You need to have a pain point. You need to have people who are willing to pay for that. Build some traction, and then funding will be coming. So that's really important. So this is one of the things that we teach at the Alchemist. You have to build something, then become like a frolicking deer. Everybody would like to get you. So this is important. We don't want just to. This is a problem that we had in Jordan when the ecosystem actually started. I think my friend Malik Shishtawi was with me when we started the ecosystem in Jordan. They were telling us you have to go and get funding even if you don't have a startup. That was really bad. So what I want people to get out from this conversation, it's not just about financing. You need to have a good product that people want to have, then financing would be coming.
Mohammed, if I wear back my QDB hat, I'll definitely agree with you. But wearing the audience hat, the startups hat, I would partially disagree, because I think so, again, talking from startups perspective, and please everyone correct me if I'm wrong, right? I'm sure there are many startups who have got product, who've got traction. However, the biggest challenge remains to raise funds, right? And that is probably one of the things that's holding them back or holding the ecosystem back. Where, again, I'm not saying that it's holding them back for good or holding the ecosystem back for good. It's great that we are heading in the right direction. I'm on the same page as you. I'm an incubator. We of course believe in going beyond the funds. We believe in having a better business model, having a better traction, and then comes in the funds. But I think so when we see from the startup's perspective, the picture is sort of different, right?
Could be. I was a founder, and but this is based on what you see as an experience. If you have a great company, if you have a great product, you will get funding. You can, maybe one of the things that we had a problem when I was in Jordan, before going to Silicon Valley, I didn't know even that there was something called The Alchemist. I was just browsing TechCrunch, and I discovered The Alchemist, and I applied, and a week later I was in the US. I didn't know anything about that. I had a great product. Okay? So the thing is that maybe we need more awareness, more education. People should be exposed to all the accelerators, all the incubators. How do you build traction? What is the minimum thing that an investor will be looking for to get you in the radar? So that's my perspective.
Absolutely. So follow-on question to that. So Alex, Michael, you both spoke about angels, right? Basically the private sector, partially the private sector, right? So in most of the bigger markets, right, even when we go to the neighboring countries, you see the private sector playing, or the private LPs playing sort of a vital role, right? Whereas when you come over here, you see them taking the back seat, and still the government-based initiatives are actually taking the lead. Why do you think that's happening, and how important do you think it is for the private sector to actually step up for us to head, in the right way?
I can have a go if you like.
Yeah.
Well, how important is it? It's vital to have active angel investors. It's absolutely vital. It's amazing for the startups. It's great for the VCs because it gets the companies more VC ready. Being an angel is fun. I'm actually part of a business angel network with my friend Marcel, who's sitting here in the south of France. Being an angel is actually a lot of fun. You get tremendous satisfaction out of helping younger companies and getting them on the road to being VC ready, doing that first round and growing. So it's something that, of course, there should be more of in Qatar, and there's starting to be more of in Qatar. I referenced earlier the work that QDB is doing with training programs, training of angels, basically explaining how to be a better angel, how to find companies, how to diligence them, how to help them. And I think that program has also helped put on the ground more sure of themselves angels to look at deals. I don't know the statistics, but I imagine that there have been more angel deals and more angel activity since that program at QDB started. Why is it, you ask, that that angels tend to take a back seat here compared to other markets? I don't want to answer that question. I mean, I think maybe there are cultural layers that are at play, and I don't really see why. I mean, I think it's a young market. Angel investment in the US and in the UK is very established practice. Everybody knows what it is. People who have the capital like to do it and enjoy doing it. Here, it's relatively just the beginning. I think we also need to give it time.
I can add one thing. So one important element of angel investing, and it's sometimes overlooked, is just serial entrepreneurs. If I look at markets like the US, Europe, and if I look at Asia, the majority of angel investors in Asia were former entrepreneurs that had a tech business. Because for them to recognize a company that they can invest in that look like what they were 7, 8 years ago, 10 years ago, it's an easier investment to make than maybe someone who has a lot of investments in real estate. And they want to do angel investing, but it's a bigger step for them. So I do think that, and it's maybe a simple answer, but you also have to give it a little bit of time. for this to develop, and for some entrepreneurs, for some founders here, to get some exits which they can reinvest into some angel checks as well.
Great, makes a lot of sense. So my next question is actually for Mohannad, but I'll actually open it for all incubator, accelerator representatives in the audience as well, right? And this is not my question. I'm going to be transparent. I picked this question up from one of the discussions that was going on the Startup Grind channel, right? So there's a notion in the ecosystem that international incubators or accelerators aren't really investors, and they shouldn't be categorized as investors. Their business model is more inclined towards event management, marketing, and they are more about PR. Mostly sponsored by a local partner. So, what are your thoughts about this? How do you see incubator, accelerator programs as investors, or do you think their business model is no skin in the game and sitting on a comfort couch for themselves?
So I have two answers. For the first thing, for us...
I will try to answer it as well after you, just to be very fair.
Yeah.
But I'll put it on to you first.
So for us as Alchemist Doha, as I said, we're an equity fund. So we're actually investors. I can't say that incubators or accelerators are just here for PR. I've heard something like that. Actually, I was in a conversation with one of the investors in Saudi Arabia, and they were saying, we're getting a lot of incubators, and accelerators, and they're not doing anything. It's just that a PR. They want to put it at one of the big events. But no, I don't think so. I think being accepted like in a 500 startup or an Alchemist or Techstars is a very good thing for the startup, because this is the first indication that, or a signal that this company actually has something. So it's really important. So it's not just about them investing. Okay, you as a startup, when you get that stamp, it's really important for you. And I've seen that. So when I went to the Alchemist, I'm just no one coming from Jordan. I have nothing. I was called the crazy Jordanian. But when I had the Alchemist, I managed to get in front of Draper, Sequoia, and all the big names there. And I had the privilege of going in and selling to anybody because I'm just an Alchemist alumni. So that's a very important thing for entrepreneurs and founders. No, I disagree with that. Yeah.
That's a great take on it. So just 2 cents of my thought would be, see, I've been on both the sides of the table, right? I used to work with Startup Bootcamp at one point. So worked as a venture builder, as a consultant, and then I got on the other side of QDB, the sponsors, right? So I sort of do understand, as much as I sort of do understand where this whole notion is coming from. I do stress, of course, that programs or incubators like your good selves, or be others who are internationally based who come to Qatar, do bring certain value, right? They bring certain know-how, they bring certain expertise, which is definitely needed for this market. However, I do believe that they need to put their skin in the game. You cannot just come to the ecosystem being sponsored and run a program, being fully funded. I think the incubators, they all need to have certain of their own funds that they are co-investing over here to kind of, to actually be a part of the startup's growth. That's just my view.
I'm not sure anybody would disagree with you, except for maybe a couple of accelerators who want to benefit from that. But I mean, what you say makes total sense. I think everybody agrees with you, Salman.
Thank you so much. Thank you, Alex. Maybe one last question, right? But this is specifically for Alex and Michael, right? Where do you see, so which model do you see working better for startups? Is it the VC model or is it the incubator model? Like, there are quite some startups, again, that we come across, and they're like, oh, no, we don't really need to go through an incubation program. Although I personally, again, before I put it to you, I personally believe that it's the whole journey that, you need to start off with an incubator. You kind of get de-risked, right? I believe we sort of de-risk the deal flow for you guys, right? So the startups who come from us, they are vetted, they're already invested, so you have a much better pipeline. And then comes you guys. However, from a startup's perspective, many of them, they would rather go directly to a VC than coming to an incubator program. Where do you see the differentiation between both the models?
Michael?
Yeah, sure. From the outset, the importance is that we invest in the best founders. And to be very frank, I don't care where they come from. If they come to an incubator, that's amazing. If they come directly to us, that's amazing as well. If we go out and look for them, this also happens sometimes, that works as well. I think in the end, it's all about us investing in a company that we have the highest conviction in. Now that being said, from a founder's perspective, there are a few advantages of going through a program versus hitting us up directly. And it's dependent
Can we record this? I want to use this as a reel on.
So I mean, dependent on the stage you were in, but we've seen some amazing deals that came through incubators and accelerators and finance programs that helped the founders with conversation with VCs. And sometimes, guys like yourselves and different programs have, for instance, the VC meetups. And then when I speak to founders afterwards, a lot of them are saying, man, we never get a chance to meet 7 VCs in a row in 2 days' time. And that's an amazing experience for us because we learn from the conversations, we get feedback immediately, and it's been so helpful in sharpening our pitch and sharpening our conversation. We take it back to our team and maybe change our story a little bit. Or we've built a new network with a bunch of VCs that we haven't had a connection to. So there are clear benefits to having these programs in place. But for us, and I think for most VCs, there are different ways of getting to founders. Incubation acceleration is one. Again, finding them directly is another one. We've invested in a founder that I just met at a conference fairly randomly. So that still happens as well. In the end, for us, it's all about investing in the best founders and how to get to us, to each their own.
I think that's right. I would have the same answer. We do sometimes recommend acceleration, though. We do meet young entrepreneurs who we feel are not ready, the idea has merit, and therefore please go and get yourself accelerated. Clearly Mohanad benefited from The Alchemist, so from an entrepreneur's standpoint, I mean, there is that value and it does make sense. But it would be a mistake to say that that all founders benefit from acceleration. I think some founders don't need it for whatever reason, because they're experienced, because the idea is mature, because they have a great team, because.
Great, thank you. One last question to everyone, to all of you. Let's say there's a startup in the audience, right? Looking to raise funds now. What do they need to have, or what's the right weapons that they need to equip themselves with to have a conversation with each of you? What's the right what's the right approach? What's the right preparation they need to do? So just a quick brief for the entrepreneurs to actually understand and have that first discussion with each of you. Let's start off again, seniority based, with my dear friend Alex.
It's not fair. I think I started most of these. There's a whole deck that I have. I give this course a lot, on the course. I give this mentorship a lot on, how to make yourself attractive to VCs. And I'm willing to share it with anybody who asks me for it. I think it's on our website, in fact, in the resources section. And there's all sorts of tidbits of information in there. So, I mean, a lot of people who present to VCs, they won't answer the question. You ask a question, and they'll talk around the question without just saying, well, the answer to your question is yes, or the answer to your question is no. So, you know, of course, there's a lot of ways to present well to a VC. VCs are by nature a little bit impatient because we see a lot of deals. We see upwards of 1,000 deals a year. We invest in, you know, 3 per year. So actually we're by nature, by structure, impatient. So you have to take that into consideration when you're a founder presenting to VCs. But at the end of the day, you need 2 things. You need entrepreneurial drive and you need a defensible idea. Those 2 things will get you to have a longer conversation with us.
Can you name one do and one don't for a startup to approach you?
Well, again, the do's are in that deck that I'm happy to share. There are
the top
many.
one, the top-notch one, which you see and you're like, okay, I'm going to have a conversation with this, and one that you say like, no conversation, like you close the door.
Yeah. Look, inaccuracies are a big don't. I mean, presenting your project to a VC for potential investment is a big moment in your entrepreneurial life. Don't have inaccuracies, you know, incorrect sources, spelling mistakes. Just have the thing properly organized so that you present in a, let's say, to use the word professional, which is not quite the right word, but in a professional way. I would say that that's the top do, because, I mean, people have different tolerances for different things. By the time I see the 3rd spelling mistake, I'm really thinking that this is not a project for us. That would be the top the top do. The top don't. I mean, all projects are a little bit different. There isn't really one, to be honest.
I can definitely relate to that. Like I've had startups in, you know, growth stage come and pitch, and they've got errors, typos in their pitch decks, and that's definitely a turn off. So I can totally relate to it. Michael, would love to get your thoughts on it.
Yeah, I'll take a slightly different approach because I agree with Alex, so I just can't re-say what he all said. So I'll take a different approach.
See, Alex, I'm actually giving you, you know, benefit. You go first.
I said it was unfair. You should have been more fair to the others.
Whenever a founder reaches out to a VC, you have to keep in mind that the VC or the angel actually might say yes. And you might think that's a weird comment to make, but if this person says yes to your investment, you're going to be stuck with them for quite a while. Our business, we have typically 10-year fund lives, maybe 10 as well, which means that, you know, it takes about 7 to 8 years to get to an exit if you're an early stage investor. It might be 5 years, but let's take 7 years. This means you're going to be stuck with us for 7 years. And either when we're on your board or not, but you have to imagine that you're going to be stuck with me and my team for the next 7 years. That's a big implication. So oftentimes when I speak to founders, my question is, let's say we say yes, do you want to work with us? And for me, it means that as a founder, you have to do your homework. When you reach out to VCs, do I want this person, do I want this firm on my board? Where have they invested before? Have they done deals where I can do a ref check with another founder? And I'm saying all this because one of the most important things to me is, does a founder do their homework?
And just to add on, so has it ever happened with you that you've actually said yes and the startup has denied?
So we have, we're amongst friends, right? So in all transparency, we've had deals where we said, man, we want this, and the founder was like, yeah, no, not really, not for us. Which is fine, because we're not for everyone. Like venture capital, we are expensive. If we're on your cap table, it's not cheap, right? So we take equity and stuff. So it's important that you have the right relationship, and it means the founder has to be critical of us, and we have to be critical of the founder. So if I ask a founder, why do you want us on your cap table? And they can't answer the question, I would like them to do their homework first.
All right, one do and one don't.
Yeah, I'd say that the biggest don't is just don't BS. You know, we've been in this game for a very long time. We've seen a lot of deals. We talked to a lot of founders. From certain signals, the way you look, the way you move your hands, we can see if you're telling the truth, yes or no. Just be transparent. If you don't know the answer, just say no, and then we'll figure it out together. So that's the biggest don't. Just be who you are. The biggest do for me is know what you're building. If you come to us with a product or a company and you really show us that you really know what you're doing, and there is a not necessarily passion, but there's this inherent I really want to get this done. That is the biggest do for us.
All right, thank you. Mohanad, let's hear from you, buddy.
Yeah, but one thing before I forget, because Majid is going to kill me if I don't say that. So you guys are all invited to our launch on Tuesday. So we're launching the Alchemist Accelerator on Tuesday. So if anybody wants, please go.
All the best.
I think you stole Majid's thunder.
Yeah.
He was planning for that.
He's looking at me and I'm a little. So I always wear my entrepreneur hat. And that's really important, because whenever I approached an investor, I really want to know who they invested in, what's their thesis, and are they the right people to be my partners. So that's the most important thing. So I echo the gentleman here that they have to convince us that we are the right person to work with them, and they are the right person to work with us. So that's really important. But there's another thing, there's another twist for us at The Alchemist. So we really care for technical co-founders. We want to find, so if you have a business, we need to see a technical co-founder, and that person needs to have a significant share in the business, because everything goes around into the technical co-founder. Of course, when you build a product, then the sales kicks in and you want to build. So that's very important. On the do's and the don'ts, the big don't that I faced, and I learned the hard way. I was kicked off from a meeting with one of the big investors in the Valley because I did this in a wrong way. Is that when they started asking me, and I was sorry for the word, I started to bullshit, and they caught me, okay? They started asking more questions, and I was just saying everything wrong, okay? So I started to lie, I started saying everything, and they said, Mohanad, thank you, the meeting ended. And I'm gonna use that with every startup that I'm working with. The difference is that with us at The Alchemist is that the investors are actually entrepreneurs. We're technical co-founders, so we understand technology, and so that's really important. The thing that I want in the do for them is just be yourself. Show us that you are the right person to build that business. If you show us this, then we're going to believe you, we're going to work with you. So that's really important for us.
Absolutely. We are a firm believer. Always bet on the jockey, not on the horse. So we look for technical founders as well. On that note, Indik, I want to ask, since Mohanad, he gave a shout out for his launch event, can I do the same for mine, which is happening on 16th?
I'm going to start charging you guys for these announcements.
Okay. Just for, just on that note, we at Qatar FinTech Hub, we're going to launch our new Wave 6 of FinTech Incubation and Acceleration Program with a new, fresh batch of startups. Some of them are over here, very excited to begin a new journey with them. We are launching the launch event is happening on the 16th of September at 6 p.m. in our Scale 7 Culture and Design Incubator located in M7 Musharraf. You all are invited. Would be very pleased to have you all. And that's about it. Thank you. We'll open the floor for our dear audience to ask any questions if you have. I'm sure Malik is always the first one to ask questions.
Yeah, before we go to that, Salman, I would like you to just moderate the Q&A. Just for the audience, try to keep your questions short, right? Ideally, direct your questions to one of the panelists, right? So we can maximize on the time as well. Salman, you have the last rights on how you want to manage those, okay?
Absolutely. You can direct your questions to me as well if you have anything. Happy to answer. We have Malik. Malik has a question. The gentleman over there.
Assalamu alaikum. My name is Malik Shishtawi, Mangosteen Events. Thank you very much for the wonderful moderation, as usual, Salman. pleasure seeing the gentlemen, all of you, and we're working closely usually with most of them as part of the ecosystem as we organize events, including what Endika mentioned, the MENA FinTech Festival and Arab Sports Tech Forum, which we also cooperated before with Salman. We had a meeting today with Michael. We have a scheduled meeting also with Alex and the team. We're waiting you to do your launch so we can discuss your collaboration. I want to thank you first of all for your courage to say your story about how you failed because you lied to the investor. It takes courage to do that, and we appreciate sharing your experience. Actually, it's not a question. I appreciate your valuable inputs. It's a comment on something Salman mentioned regarding the fund of funds. And this is something we were talking today, me and Michael, about, and how much it made it attractive for the VCs. And I think definitely it is good, but I think we should be also very smart about the way we use it. I mentioned today to Michael that every time I talk to international representation who want to join our MENA FinTech Festival in December, they ask me about this. And then they ask me about Golden Gate and is it part of this or not? And I mentioned to them, no, this is a separate initiative. So I think we need to be smart about the way we use it and how we can really utilize platforms like what the gentlemen are doing and what we are doing also, hopefully together this time, Salman, to activate these kinds of announcements before, for example, the next Web Summit. Because if a Web Summit comes and the announcement is not put into action, this could fire back on us at Qatar. So we need to be very careful about that. Definitely. This is my remark, and thank you, Endika, for your efforts as usual.
Thank you so much, Malik. Well, you can give them the blueprint that Michael just gave, the do's and don'ts. So, as far as those people who are asking how they can get in touch with Golden Gate Ventures, probably, Michael has a open door policy. Yes. Okay, next question, please, ma'am.
Hello, thank you so much.
Can everyone please introduce yourself?
Of course, I should say. I'm Maysoon Zayed, and I'm the CEO for Betty Global. I've been in Doha for 10 years, working in entrepreneurship, technology, and so forth across specialized industries. I have a question. How do you typically support portfolio companies beyond capital investments? And what trends and sectors are you guys interested in right now, and why?
Is the question for a specific across who? So she mentioned VCs, so probably one of you can take it, and then maybe Mohanna, then I can add in on how we support the portfolio companies.
Yeah. So not all VCs, I guess, have this this kind of smart money approach where they want to be more than capital. I think you'll find that most of the good VCs want to be smart money for the companies that they invest in. So we, for example, are not really interested in investing if we can't help beyond the capital that we can bring. So how do we help? So I've been a venture capitalist for 24 years. I've gone through 3 economic cycles as a VC. I know how a startup should behave in a downturn, how a startup can take advantage of a good economic cycle. So there's experience there. There's contacts that we have in the wider industry that we can contribute to our companies. So there's all sorts of ways in which we support our companies. And again, you'll find that most of the good VCs do this. What sectors do we look at? As I said a little bit in my introduction, so we like to be generalist and opportunist. I mean, some VCs say they specialize in AI. AI is in every sector today. I think VCs should remain open to new innovation, new trends, if only because an investment period is typically 5 years. So it takes a long time to deploy. During those 5 years, things will have changed. The tech world is moving very quickly. So generalist and opportunist is the at least our positioning.
Thank you, Alan.
Maybe one small thing to add. So when it comes to added value, it's true that a lot of VCs will bring value when it comes to parts of business development, fundraising, etc. What I do think is important as part of the homework is understanding what you're asking from the VC. One of my good friends in the US always says the best founders don't need any help. They're actually telling you, leave me alone, I got this, call me back in a few months. But typically what we do is, what we try to do is, whenever the founder sees a big opportunity, that's when you need to be there. So this could be an essential connection that we can make within our network of investors that we work with. Some of the corporations that we work with have big POC programs or help with commercial distribution. What is often underestimated and what is very important from a VC standpoint is, once you have a lead or a co-lead VC, is ask your VC to help shape your investment round. We know so many folks in our industry that are amazing investors that can bring added value to a cap table. So oftentimes what we try to tell the founder is, once you put a round together, ask your committed VCs to help structure the round, because it can be very helpful in terms of added value capital as well.
Mohanad, do you want to add something?
I go the different route. When I was an entrepreneur, so I used every second, every moment that I needed, any support, any introduction, and went to my investors. So I was privileged to have investors in Silicon Valley. So when I wanted to go into a gaming company, they will call them the second day I was in the meeting. If I want to get funding, they would support me. So your investor is your partner. So do as much as you can to get their support, because they want to win. Having said that, us at The Alchemist, so you get all the access to our network, to our mentors, to our advisors. So it's not just getting the funds from The Alchemist, you get everything good about The Alchemist Accelerator. And now we're in the US, we're in Europe, and we've just opened in Japan as well. So you get access to all that. So yeah, hopefully we can be of support to startups, because we want to make money after that as well.
Thank you. So I'll just quickly add something. So when we invest as an investor in a startup, your success is our success, right? So I'll talk from a bit more tangible perspective, right? So within the Qatar FinTech Hub, just to give you, a better perspective. So right now, if you see the payment licenses, right, the PSP licenses that in the country, they're about 12, right, out of which 3 are from our portfolio. Now, these companies got licensed, these startups got licensed after they finished the incubation program with us. So we continue supporting their journey even past their incubation or acceleration period. Same goes with startups who are in other sectors, be it buy now, pay later, be it loan-based crowdfunding or whatsoever. So the journey doesn't end. So see, the program is quite, it's quite tight. It's for 12 weeks because that's when you're actually going to accelerate their growth. But of course, it goes above and beyond that. So yeah, that's more or less it.
May I add something as well? Because I disagree with Michael's friend in the US who says that entrepreneurs, the best entrepreneurs have all the answers. So, being an entrepreneur, as you will know, I was also an entrepreneur at one point, can be the loneliest job on the planet, right? I mean, it's a very difficult, lonely job. And so you may have a lot of answers, but there are always alternatives. And even just having a sounding board from an experienced person who has seen such problems before is of huge value. Even just that, if VCs provided only that.
So thank you, Alex, for highlighting that. So this is one thing, this is one advice that we give all our startups, right? We have about nearly 140 startups in our entire QDB portfolio, right? We always tell them, never go for an investor just for the money, right? Always make sure there is some strategic engagement from their end, right? If it's only the money, go take a loan from the bank, right? You don't need an investor. The investor should be also your partner. They need to work hand in hand with you towards your success. That's any other question? Mr. Firas, sir.
Hi everyone, I'm Firas Sulaiman. I'm the founder of 3 AI companies here in Qatar. Hopefully you guys will all be talking to us soon. I do have a question related to the adaptation. Since you're all fairly new, maybe the most recent VCs or funds in the region, right? Setting up in Qatar, you all have great experience from before, but maybe the adaptation of the lessons from kind of a geocultural perspective here in Qatar. Two main threads on this. One is the competitive landscape in the GCC. The fact that there are companies here that have opportunities to get elsewhere investments. And the barrier to entry in the GCC is pretty low, right? Saudi Arabia at the forefront, throwing money at anything that just says, I don't know, quantum or AI or anything. UAE as well. So, what are your thoughts and what are the lessons on that thread? The other one is also the cost of living. And so a lot of founders come here and they are surprised that they can't survive with the incubators or accelerators giving them 100,000 riyals, right? Because that just gives them 1 month, 2 months, 3 months max of runway.
$100,000.
Oh, even $100,000, right? Okay, $100,000 is a good money anywhere in the world if you're in Portugal or Singapore or anything. But in Qatar, it really doesn't take you much, right, with the cost of living. So, what are the adaptations maybe? And I guess the question is for the three of you on these two threads.
Yeah, I'll have a go. Maybe on the first point, which is actually very interesting from a kind of a geo perspective. If I look at some of the VCs that we are looking at co-investments with, for instance, from Saudi or Abu Dhabi, there is a bit of a misconception of the fact that these countries are throwing money at companies that have, for instance, AI on their or quantum computing in their pitch deck. We currently have a few live deals in those markets, and what we're now seeing is a little bit of a slight of a pullback in the sense that they are spending way more time diligencing businesses. So even if you are looking to expand from here to a massive market such as Saudi, there is, I agree, a massive opportunity. But I think the diligence at this moment is more intense than it was a few years ago. I think there are more VCs in the market than there ever were. So even if us as players are relatively new to the market, the lessons we take coming here, one is expansion is not easy. If you look at a lot of companies, the most natural expansion is go to Saudi because it's a big market. But if you are expanding to Saudi, the first thing you'll find is massive competition. There is capital to support the competitors that are in the local market. And there's a technology arbitrage. I think to an earlier point, you see a lot of techs that have either AI or some form of AI as part of the business model. So it becomes harder and harder to differentiate. So I think what is an opportunity is definitely going from here, expanding into these markets. But I would be very cautious of the fact that there is a lot of sophisticated capital in those markets that are looking actively at deals and is investing, and that diligence is taking a longer time. So if I were a company from here or a founder from here looking to expand these markets, what I would do here first is actually have a conversation with sort of the local ecosystem and the local experience is what are the steps that I would need to take as a founder to start expanding in these markets.
Thank you. Did that answer your question for us?
Do you have another question? Alex, you want to?
No, I'm just conscious that we didn't address Firas's second question about the cost. Yeah, about the cost of living. So I mean, your question is that a handicap or is it an obstacle for? And
are you shifting what constitutes pre-seed, seed, and create?
Yeah.
Money.
Yeah. So to be honest, Firas, that doesn't really apply to us that much because we're a Series A investor. So by the time we invest, we're talking about rounds of millions, not hundreds of thousands. And so therefore, by that time, there's less, let's say, sensitivity to the local, let's say, price index. So maybe it's a question for earlier stage investors. Among the investors here, the earliest stage is actually Salman.
Thank you, Alex. Well, I think so. That's a great question, firstly, and I think so that that is partially addressed by the Startup Qatar program that was launched during the Web Summit. So if you take a look at the Startup Qatar program, which is under Invest Qatar and also co-managed by QDB, my dear colleague Mohammed Al Imadi leads that within the QDB mandate. So the program is sort of helping the startup across their entire journey, right? It is not just in terms of investment. Well, see, you have to accept that the investment is there, right? See, for any startup coming over here, there is a pre-seed product that we have at an incubation and acceleration stage. So of course, if you have a viable product, if you have traction, you can come to the incubation program, you can get the pre-seed funding. Follow on, you can go to the QDB seed funding, and you can, if you qualify, you get the seed funding from there. And as part of now the Startup Qatar program, you not only get seed funding, but you also get visas. They're working hand in hand with Jusur Institute, which is under Ministry of Labor, to have entrepreneurship visa. They are working to provide accommodations for startups, right? I don't know where is it being hosted, but there is an initiative in that direction. So I wouldn't say it's already there. I do identify and I do acknowledge that this is definitely a challenge that many of the startups face. And trust me, I talk this because I work, I've come from grassroots level, right? I'm born here and brought up over here. I've been a part of this, I've seen this ecosystem when it did not exist to where it is right now. And I worked at grassroots level with startups hand in hand. So I do identify the challenge. I'm not saying that it is already resolved, but I think so it's heading in the right direction to hopefully be resolved in the coming years. Now, this was a very diplomatic reply that I have to give, but it's also the truth.
Yeah, thank you. Hello, my name is Jean, just graduated from Stanford University and just moved to Qatar from Silicon Valley. Currently, I'm doing my second startup. Before I had one exit, and I have a really simple question for you. Do you believe in solo founders, and do you invest also for solo founders?
Sorry, what's your name?
Jean.
Jean, the question was for?
I think for Michael and for Mohammed.
Just one more. What stage is your startup when you talk about solo startup?
We are bootstrapping.
You're bootstrapping. Maybe Mohammed should take this then.
But you exited.
From my previous startup, yes.
Yeah, so that's a
Currently, I'm doing my second startup, who also registered in Qatar from QFC, from the Web Summit.
So are you a technical or a business co-founder?
Actually, I graduated from Stanford as CS student. Yes, I am a computer science student. But in my startup, I'm doing like a business thing. But I have CTO. Yeah.
Yeah. If you have a CTO that has a significant share in the business, then this is something that we look into. You already have a seal of accomplishment as you exited your first business. That's the second thing. Third thing, you have to be a B2B business for us to look into. But you already have at least 80% of what we're looking for.
Thank you.
Let me just add to that, right? So if you're a solo founder, I think it gives you a lot of opportunity, right? You're in the ecosystem, which is at a very developing phase, right? In Qatar, you have a lot of opportunities to actually collaborate with other startups who are somewhat at your stage, or they are entrepreneurs. Since you said that you are more towards the business side, I'm sure they are entrepreneurs who are more on the technical side and they are looking for business expertise like yourself, right? So, of course, having a solo founder is not the best approach when seeking funding. Advice would be to, of course, go and have more co-founders with yourselves.
Yeah. Thank you.
You're welcome.
Tonight might be the best day because I know there are startups here who have found co-founders at startup grind events. They didn't know each other before, but they've become co-founders.
There you go. Startup Grind is the perfect matchmaker for you. There you go. Yes, sir.
Sorry. Hi, good evening. Thank you all. My name is Max. I'm with Oyos Technologies. We're a very early stage behavioral dynamics startup. A question to maybe all of you, if you don't mind. For early stage startups like ourselves, what would you like to see in an MVP? How minimal is a minimal viable product for an early stage company that might approach you? I realize you're investing at different levels, but what would you like to see, like if you like the top thing, if you could all share? Thank you.
I think that is also for Mohannad, and probably if Alex throws a ball on me, then I'll take it.
I have different answers, but wearing my entrepreneur/investor thing is, if you build an MVP that has traction, that you can show us that people actually want to buy or to use your product, then this is something that we can look into. But I don't consider an MVP just as a product, so we don't look at that. It has to solve a problem. There's a pain point. There's a gap in the market, and there are people who are willing to pay or to use. We've seen some startups that, because we're in an enterprise level, so it's a B2B, they bring in like letter of intents with enterprises to work with them. They're doing MVPs, POCs. So that when we speak with those partners, if we get the sense that that startup is actually doing something that is promising, then this is something that we can look into.
All right. Thank you, Mohannad. Maybe can we, last question, is that okay? 2 more? Okay, great. I mean, Indica is the boss, so sure.
Hello, my name is Noor Ayuni. I'm the general manager and co-founder of Sportify. My partner Abbas is there. So I have 2 questions. First question is, in platforms like Sportify that connects tech and sports and fitness, what role does scalability play in attracting VC's investment? That's the first question. And the second question is, how important is building a strong community or user base versus offering a wide range of services? Cool.
So okay, let's get your question. Let's break it down. So your first question is, how important is it to have scalability in a sports tech idea?
Yes.
Okay, for a VC to look into it.
Yes.
What
exactly.
stage are we talking about?
Bootstrap.
Yeah, I guess a quick answer to this one, extremely important. Our business only survives if we invest in scalable companies. So for any investment that we put in, we would like to see 100 times our money back, which means that any dollar we put into your company, scalability is of utmost importance.
That's a very straight up answer. I think it will go across for everyone, right? I mean, scalability is the key factor.
Yeah. Hi. Thank you, Indica, for inviting. And I'm Fawaz, founder of Boot Up and Curve Up. We are an education technology company, but we are focused more on the future of curriculum development, much into B2B, and we have our own product. My question is, we just moved to UAE, and we've been traveling across MENA region, traveled Qatar a couple of times, and thanks to Indica with some more connections, we got some more clients in Qatar. My question is, incubation services and the VC to any sort of initiatives, how much of effort is put into an approach like develop, value, deliver, where the market creation, not just the financial investment, but the support which is enable for them to create a futuristic business model? Because most of the entrepreneurs like us, I'm trying to learn a lot more from this market, localization, creating access to the market, and credibility plays a major role for you to have a bigger win. And I think drove about 10,000 plus kilometers, took a license, drove around with all our products and service and team to understand. Takes a lot of energy and effort, but you can't be doing it forever. So what sort of initiatives and efforts in all these institutionals and services provide in terms of enabling the market for a develop, value, deliver approach?
Okay. Do you want to answer that? I could answer that.
I think, Salman, you should take that.
Sure.
You come from an incubation background.
More than happy to answer it. So, see, sorry, Gento, I didn't get your name, sir. Fawaz. See, Fawaz, how the incubation or acceleration structure works here is that we see the program as of main value. For us, money is just the cherry on cake, right? It is not the actual value that we're providing. We're actually providing you value from the program. So we run about 12 weeks, which is around three months of program. It starts off with setting your OKRs, your objectives and key results. So when you come into the program, at that moment, we set your objectives and key results for the entire 12 weeks that you're going to be in the program. Week by week, we track your OKRs. We see where we need to make some tweaks, where we need to make certain progress, what we need to change, how we need to enhance your growth week by week. You go through multiple modules, be it setting your value proposition, be it setting your growth strategy, be it your scalability, refining your pitch, learning how to meet investors. So part of the discussion that I had currently with Alex, Michael, Mohannad, this is something that we also cover in our programs. I'm no way marketing our programs, but this is just the module that we go through, right? And then of course, then you come to once the entire program finishes, you come to a demo day where you actually get to pitch your idea to investors, to partners, to raise follow-on funding. Now you have to always remember that your success is our success. So once we have invested the first ticket in you, we want you to go on raise follow-on funds, because when you raise, that's when your valuation goes up. That's a profit for us. So that's in a nutshell how it works. I hope I answered your question.
Okay, I think we're going to call it a time out for the session, because I want to give a little bit of time, because networking is really important, where people get to know each other. This is where a lot of good things happen. So Salman, thank you very much for managing this tough panel. Thank you so much. Alex, Michael, Mohannad, thank you so much for coming today and sharing your valuable insights. Really appreciate it. Right? Thank you very much. Can we give a round of applause for them, please? There's some nice food. Enjoy the evening. Meet people. Get to know each other. Thank you very much for coming, everyone.
Thanks for you. Hey, how are you?